Housing Counseling Call. We are going to get started in just a moment. Glad you're here, and give us just a moment to get a few more people on the line. Thanks. Okay, welcome everybody to the Leaders in Housing Counseling Call. Got a busy agenda, so we're going to dive right in. Glad to have you here. The good news is Matthew is back from vacation, so we'll have a seamless and excellent call, and we'll appreciate the fact that we'll have his insights as we go through the agenda. And actually we've got a couple interesting conversations. One is going to be a discussion on how agencies need to prepare for the digital future. So really the issues here are how we as an industry will start being able to work more closely with the financial services industry given all the digital and cybersecurity requirements that are there. Lot Diaz from NCLR will be joining us. And he's, as you well know, both been deeply immersed in the housing counseling world, but also has thought a lot about these technology issues. And we'll start sharing some of the experiences of what NCLR is trying to do in this framework to see how it's helpful for other agencies. And we also had a discussion yesterday with Mine Ting from the White House, from the National Economic Council, on the MHA program. And on the last call, we had a conversation about all these unspent HAMP monies. One of the vehicles might be if there's a way to make the MHA program work much more effectively than it does now. And some of you have been participating in this ongoing conversation about what needs to be done to fix it. I'll have a couple people on the line to talk about how that conversation went and some ideas about what might be possible to fix it, and then we need to do some thinking about if that's enough to really make it worth people getting back engaged with it. So, but before we do all that, big on our agenda is where we're at on the legislative updates. We've had a really busy time here, and thank you everybody a lot for the heavy and sometimes very fast turnaround on signatures. This turns out to have been high value. So Matthew, let's start out with Johnson Crapo and the housing finance reform work. So what's happening?
Yeah, thank you, Bruce. So it has, as Bruce said, it's been a pretty furious last week or maybe even a couple weeks now. I'm not going to go back and recap everything in terms of what's in the bill and what we've been asking for. I will thank everyone that signed on to the many sign-on letters that we've circulated in the last 2 weeks or so. And as Bruce said, it was all worth it because we're having some success on the Johnson Crapo bill. So amendments to the Johnson Crapo bill were due last Friday, and there's 3 amendments that I'm going to talk about, 2 that are directly relevant to housing counseling. So you see on your screen in unfortunately really small print the provisions that were proposed by Sherrod Brown from Ohio. I will say to all the Ohio groups out there, if you have a chance to send a quick thank you to Senator Brown, that would be great. But you see the provisions that were included in his amendment. They call them housing counseling amendments. I won't go through them all, but I'll just hit some highlights. The first one up there It would add a provision that would consider a servicer's history of working with housing counseling agencies when the servicers are going through the process of being approved to be a servicer within the FMIC. So that would be a huge win for us if we're able to get that in. It would, obviously provide a great incentive to servicers to be working effectively with counseling agencies, so they would be able to participate in the secondary market. The second one there would add a provision that would require servicers to establish procedures for referring delinquent borrowers to housing counseling as early in the delinquency as is practicable. And that's, that's a pretty self-explanatory why we want that in there. Obviously, the earlier that that borrowers get into counseling, troubled borrowers get into counseling, the more effective it's going to be. So, just trying to work that into the system as best we can. Then in a few different places, it would add to the duties and responsibilities, one for the FMIC generally, one for the Office of Consumer and Market Access, provisions on offering incentives to and encouraging borrowers and other approved entities, which is essentially servicers and some of the other types of organizations that would be working with FMIC. Offering incentives to get folks into counseling. So this is great. We've heard from Senator Brown's office over the weekend that they felt like they were getting some traction on some of these. They threw some kind of alternatives at us, and they're clearly kind of talking with the Republicans on the committee at this point. And we'll see what happens at this point. But we do feel we're certainly encouraged that we're getting some traction on these housing counseling amendments.
And big shout out to ESOP and to NHS of Cleveland and Coho in Ohio, all of which really helped raise this issue with Sherrod Brown's staff.
Yes, absolutely. And if folks have questions, then please use the chat box, or the question box if you have any questions on any of this. So moving ahead, a couple other amendments, proposed amendments that we want to talk about. One was from Senator Menendez from New Jersey, and this was on the down payment requirement. Folks will probably remember that the Johnson-Crapo bill itself included a requirement that borrowers put 5% down and made it 3.5% for first-time borrowers. This is, our concern with that is that we don't think that those down payment requirements should be hardwired into the legislation. Ideally, we think that the FMIC should be able to set the down payment requirements in all cases. Politically, though, that's just not possible. So as our kind of compromise position, we encouraged senators to push for keeping the 5% and 3.5% down payment requirement, but in the case where a borrower had received pre-purchase counseling from a HUD-approved agency, that in that case the FMIC would be able to go lower than the 5% and 3.5%. And so Senator Menendez included essentially that language. It's got a little. Other borrowers also can fit into the exception that they created, but for us it's important just to note that they would, if Senator Menendez's amendment were accepted, it would allow the FMIC to go lower than 5% and 3.5% for counseled borrowers. I will say that and we've had a lot of conversations with all the folks from the Senate Banking Committee. They've really stressed that the down payment provision was one of a few people called it kind of the most fought over provisions when they were negotiating the bill. So, we're obviously pushing for this. It's great that Senator Menendez proposed the amendment. We can't say where exactly it is, but that was, a heavily negotiated provision. So it is going to take, a lift to get that adopted.
Well, but there's also there's this Gang of Five opportunity, which is the committee is very interested in getting more votes onto the bill, and indeed the 5 progressive Democrats, and this has become one of the issues that's getting batted around. So really great that everybody did a lot of work to elevate this, and there's positive signs out here, right?
Absolutely. Sorry, I'm just sending a message as we're doing this. So yeah, absolutely. It's yes. The last amendment to touch on was from Senator Warren. So this is not exactly something that we proposed, but it's certainly a good thing. So this is around the Johnson and Crapo tied mortgages that could be sold into the system to the qualified mortgage provisions. And folks remember that within the QM, it set a hard cap of 43% for the borrower's debt-to-income ratio. We thought it was a bad idea at that point, and obviously don't want to see them double down by including it in the housing finance reform legislation. We had suggested allowing borrowers to go above 43% if they received counseling. Senator Warren's proposed amendment is even broader. It just basically takes out the 43% DTI cap. It keeps the other features of the qualified mortgage, so the restrictions on what kind of product restrictions, but it gets rid of the 43% DTI cap. So that's absolutely a good thing. We would be very supportive of adopting that amendment. And just to kind of wrap up, as Bruce just mentioned, so there was supposed to be a vote Tuesday on the Johnson Crapo. They were going to do the markup, consider all the amendments, have a vote. They decided to put that off. They made clear that they had the votes to vote it out of committee, which is, yeah, they have at least 12. So they definitely have a majority of votes to get it out of committee if they wanted to. So at this point, they are just seeing if there's any language that they can adopt that will bring new people on, and in particular, that means the 5 senators kind of on the left of where Johnson Crapo is right now. The challenge is to if they can bring any of those folks on without losing anyone on the right. So they're still in conversations, and some of these amendments that we're talking about may fit that bill of language that will help bring in the left without losing the right. So at this point, it's kind of waiting to see what happens. But they've said they're not going to spend a lot of time on this. I think it's a matter of days that they'll see if they can win over any of these 5 Democrats. And if it looks like they're not going to be able to, they'll probably go with the votes that they have. So maybe next week, or hopefully next week, we'll have some update that we'll send out on that.
Yeah, exciting stuff. So we're very glad that we're. The great thing is that they a number of senators took our proposals and divvied them up and assigned them to have people work on it. They became specific amendments. So we'll see where this all goes. But big thanks again to everybody for the quick turnaround and jumping in on things.
Absolutely. Sorry, I went back. Anything else on the housing finance reform, Bruce?
No, I think that's good. How about housing counseling funding?
Yes. So not a ton to say here. Just to kind of frame the challenge for us. As folks will recall, President Obama's budget would increase funding for the HUD housing counseling program by $15 million. So that's from $45 million to $60 million. But would offset that with a cut of $17.5 million to the NFMC program. So that would go from $67.5 to $50 million. So it would be a net loss of $2.5 million. We're working really hard to ensure that we're fighting for the best of both, which would be the increase to the HUD housing counseling program to $60 million without the offsetting loss to the NFMC program. So as we also, folks will remember, we did the sign-on letter with close to 500 signatures, which was fantastic and definitely got a lot of notice when we sent that out. And now we're just starting to schedule, and they were on break for a couple weeks. They came back either this week or last. I forget when they were back. But now we're starting to have the meetings, conversations with the folks from the House and the Senate Appropriations Committees. So you see on your screen there the first 3 calls that we have scheduled, and we have a bunch more in the works. But those are with actually tomorrow afternoon with Senator Shelby's office from Alabama. So I didn't look to see if we had any Alabama folks on the call, but if we do, it would be fantastic if we could have you on. Senator Shelby's he's going to be a guy we'd love to win over, but he's going to be a tough sell. So having some home local voices would be fantastic for that call. Would be a big help. Same thing with Senator Pryor. So we have that call scheduled Monday at 4 p.m. We met with Senator Pryor's office, I guess, a few months ago now, and had initial conversations around the appropriation. But now it's we can be a lot more concrete about it. And then next Tuesday at 4 p.m. with Senator Blunt's office Senator Blunt's from Missouri. So any Missouri groups on the call, we would love to have you on Tuesday afternoon as well. And some other in the works. Hopefully we'll have Senator Durbin on Tuesday morning, but we haven't confirmed that. So please send me an email if you're in one of those states and want to be on one of those calls. And also just keep a lookout on your email for some more calls, probably next week and the following week.
Yeah, great. And having local groups on the call, local constituents, would really help as well. Good. Okay. And then Mortgage Forgiveness Debt Relief Act.
Yes. And so I think on the last call we had talked about it and just had a little trouble getting the slide up. So you'll see there this slide with all the members of the House Ways and Means Committee. I mean, it's been very frustrating with this bill. As we've mentioned on the call before, it's not getting passed for a lack of support. It's more politics and there's not a good reason for it to have not been passed already. Senator Reid recently commented that I think he said it was certainly going to come out of the Senate, but we do want to keep the pressure on, especially in the House, make sure that we get it out of the House. So folks in the states that are represented here, if you can make a call to your representative that's on that Ways and Means Committee, it'd be a big help. And I can circulate talking points after the call, but it can be just a short, sweet call that you want them to act immediately to pass the Mortgage Forgiveness Tax Relief Act, make sure that homeowners, struggling homeowners that are receiving principal reduction so they can stay in their house are not being hit with a huge tax bill that will keep them from taking advantage of the offer. Hopefully we'll have good news to report on this soon. It is.
And so on this, would an email be as good as a call, or are calls better? Do you have any idea?
I think as a general rule, a call is slightly better, but
okay.
If folks take a minute to shoot an email, that would also be helpful.
And it's not that you should call all these people. It should be, if you're serving people in their district, then that's the one that will get a kind of special attention. Is that right?
Absolutely.
Right. So.
And yeah, you may not be in their district. Your office may not be in their district, but there's a good chance that if you're nearby, you're serving clients from their district. So that would, you could make the call and say, yes, we're seeing clients from the 5th district or whatever it is. And if folks are interested and want to follow up, I'm very happy to help. Help give you some talking points, or just give you an idea. If you're not used to making these calls, I can give you an idea of what to expect or anything like that after the call.
Good. Thank you very much. So let's move on. So one of the big issues is that that we need to, as an industry, start working with with financial services industry institutions. And the real issue here is that in a digital world, we're going to need to be able to meet up to their cybersecurity standards. And we've seen this as probably one of the issues that affected our ability to do the post-modification counseling program that Treasury had. I think some of the organizations already bumped up into the issue of being able to transfer information back and forth with the servicers, and it will only become a larger issue in our work. And hopefully many of you know Lot Diaz, who is Senior VP at NCLR in their Housing and Community Development VP. And Lot has both had a long history in the housing counseling work, and also has thought a lot about technology issues. He and I were talking a few days ago, and it seemed like it would be great opportunity to hear a little bit about what he's working on. So, Lot, welcome. Can you hear us?
Sure. Yes, I can, Bruce.
Thanks. Oh, good, and we can hear you. Excellent.
It was a challenge a little bit initially getting on, but I maneuvered the system. Thanks. Let me just start with a little bit coming back how we got into the issue. A lot of you may have partners with lenders where you're actually dealing directly with some of those borrowers. The more common one that a lot of you folks are involved with are ERCP from Wells. But Ocwen is doing local partnerships, and a few of the other servicers are doing that. That's one way we got involved with it, and primarily through our affiliates who are part of our network. And then secondly, we're also, to help with NFMC marketing, created a call center to work in tandem with our local affiliates on outreach activities, and then at that point began handling individual modification and all the background documents and information needed to begin that work that many of you are very, very, very aware of. Well, what's happening, so then I think many organizations are in a similar note or could be starting that kind of work. What we've been saying, that's one side of it. The other side of it is the work that Bruce and this leaders, the Resource Center and others are trying to increase the integration of counseling into the financial services and credit delivery system. And we've had there's been lots of calls and discussions on what that might look like. And if it does come to pass, what will that mean? And one thing I'm pretty sure, I'm almost certain it's going to mean is that lender partners who are working with you are going to have, with a counseling organization, are going to have some certainty that the data that's being transmitted or shared is being protected from, kind of someone stealing the data. And so given that as a backdrop, we started thinking, okay, for NCLR's work with clients, how do we protect that, and what are the standards on that? And then the second level is we're working with affiliates. Well, how does that pass through to our local partners that we're working with? So what we've started, so to give you an example, just to kind of, so that's the overall problem, and it generally comes down to protecting personal information. I mean, the banks have a different standard, but just state statutes generally are focused on personal information. What is personal information? Well, that in most view, it's Social Security numbers, driver's license or state-issued IDs, and financial account information, whether it's credit, debit card, or bank accounts. So if you're managing that kind of data in your databases, state statutes are getting increasingly active in making sure that who's ever collecting, who owns that data, is taking steps to protect it. And so again, we come down to what is protecting it. And so we're in the, I say this, we're just starting to walk down this process of what's going to be required. So this is not a complete story by any sense of the imagination, but it really comes down into two general areas of work. One is, what are your local policies and procedures relative to having people access data? And that could be stuff like, are your computer screens password protected? Who has access to the shared drive where all the files are? Who has access to your Counselor Max or HCO or whatever client management system you're doing? So these internal policies and procedures. And then secondly is how, when you share information externally, either through email or through, is that being done through a protected route? And there's a bunch of queries and questions and standards around kind of that stuff. So so it's the kind of internal policies and procedures with staff and how information is being able to be accessed. And then there's a second piece, which is how is that being shared and circulated, or how are you working with your partner? And again, that's really emails are secure. Databases that are being housing data, are they protected? And they're looking to see, or I mean, the lenders who are coming are asking us about this, are asking us, what is that policies? What are your procedures? And in one case, we're going to actually have a bank come out and visit to look at it specifically. So I was talking to Bruce about this, and the question is some of you may have experienced this already, but then thinking forward, meaning that if we really want to get more integration with counseling and financial services, then that means this security, personal information security system, and that lenders are obligated to comply with through their regulations are going to transfer in part or a large part, I'm not entirely sure just yet, to counseling organizations working with those entities. And so I just thought it would be worthwhile bringing that issue up. And my final point would be in this is that we're kind of working through that ourselves, and we'll work with Bruce to kind of share some of anything that learned that would be useful, he feels is useful for the broader network as we make progress. So, but I just wanted to, based on earlier, because I wanted to make sure to, well, one thing is that has anybody have seen that issue? Might be another question, but I just wanted to make sure that I think it may be an emerging issue that we need to deal with and start planning for.
I mean, these are all very good points. Yeah, these are all very good points, and I think where we are as an industry are some groups are very deeply immersed in these issues, and some haven't even begun to think about them and approach them. And I think our interest is trying to be helpful to everybody in the spectrum here, so that it's so that you aren't necessarily doing this all by yourself, but that we can also figure out how to move the industry forward. And I mean, at some point, it's going to become pretty crucial, because if, for example, you want to do more delinquency work and you want to get paid for it, we will be in more situations like that, the post-modification counseling work, especially if you're going to get any information back from the financial services industry. That will all be we'll all need to be kind of working on that level. Do you have any thoughts about how long it takes, how much resources to kind of do the deep dive and figure out what you need and then how to do it?
Well, I think some of the systems we have in place based on some of the criteria, just mainly because we have a centralized email server and with firewalls, and so some of the data protection features we already have. Although we're going to have to extend them a little further than we've extended them so far to some other sites that we've opened up a little while ago. So, but that part is a technological and strictly IT solution. But the key is it has to be protected within a virtual system that is accessed only by staff and only with authorities to access it. So that's kind of the thumbnail on that. I think the biggest work for us is really making sure that the policies and procedures, access to data at our affiliate level, but even in our areas, is really meeting a standard that financial services companies will find adequate, and so that we have policy procedures, but they're not written. They're not, there's just not enough documentation on anything. Just give you like background checks, right? I mean, that's a big issue for a financial services company. Both criminal background checks and what they call dishonesty background checks. those are critical features that people who are seeing their borrowers' data as a standard that they're going to want to keep. And so we haven't really created a system around that, right? And so it's not brain surgery, but you know it's kind of one of those systemic things that follow with the policies and procedures that we're working through now. So the question of how long is that going to take? I'm hoping to get through it relatively quickly in terms of our first brush with it. I want to get a lot of it done by mid-January, mid-June, to be honest with you, because I have a visit at that time, and mainly so they can give us a kind of look at what we've done and give us a reading. Okay, we've hit, this is, you're weak here, you're strong here, you need to strengthen that, learn something from the visit. And then beyond that, depending on how close we've gotten to what's required, I'll have a better sense of, do we need another couple months to finish it out or whatever.
So honesty background checks, haven't heard of that one. What's that?
Well, I mean, the question is, I'm not sure they're mandating that, but they're asking, are you doing them? Meaning, I think a lot of this is driven from stuff that they're getting, regulatory environments they're working on. If their bank is doing those as a matter of course of business with their employees, they tend to extend that same standard to any subcontractors. I think the question is, I think it's being asked about it. They're asking, do you have a policy on it? And if so, what is that? And what are the exceptions to all those kinds of things? So yes, that was new to me too. That's a recent thing, but and I'm not sure every lender or servicer would require something like that. But my sense is, if you got it from one, there's probably others that are going to make that a standard as well.
Right. And through our relationship with CIS, the credit bureau provider that we get our credit reports through, if you're a member of NHRC, we're also about to give they're going to have a range of criminal background check things that we'll provide as well.
Oh, that's good.
So, yeah. So staff training. Is this going to be a big part of all this?
Yes, it is. It's not so much on obviously on the counseling piece. I mean, it's going to be on following once the policies and procedures are established, written, is ensuring that both all current employees understand what they are and what the implications and how they should act, but also it becomes part of any new employees who's going to be working with this data has to kind of get that, be trained in that. And in fact, both the three that I've looked at have all required. They want to know what's your training, what's your monitoring system, and what's your training system for the policies and procedures that you're stating that you have. And in addition, they ask for training on technical stuff like, what do they know, but also on the internal systems. Do you have a system to train and monitor, and who's in charge? Those kinds of questions.
So it looks like we've got some questions in the queue. What have we got, Matthew?
First is just kind of a comment or a suggestion rather, which is that it might be helpful for smaller agencies, for us, NHRC, to put together a toolkit of resources and strategies to help smaller agencies figure this out. So I just want to kind of put it out there and see if other folks on the call, if that's something that you think would be helpful and would like to see us do. And if it is, then we can definitely look into that as a possibility. By way of a question, and this is, I think, some tech lingo that I'm not familiar with so a lot. Does the PII, capital P-I-I, issue cover metadata, and are we also looking at text analysis that could happen via email transmissions with customers that may unwittingly transfer PII, and then it is unencrypted in replies? So hopefully that means more to you than it does to you.
Yeah, well, it's just, personal identifying information.
Oh, okay. So we all have to know this at the Leaders
well,
Conference. This came up.
I'm assuming that's what the question is about. And the question on that, at least what I've seen so far, the trails stop, like an organization like ours who have affiliate local partners who are working with us in these programs, we'll have responsibilities down to that level, right? And so what will happen, some of these same systems, again, I'm not saying it's full, this is going to be what we're doing yet, but I mean, what's implied is that similar standards that we're held to, if we're subcontracting work out or somehow the trail goes through to our affiliate member, there's expectations that that affiliate member is similarly aligned and has similar capacity to protect personal information. But beyond that, meaning once if the question is the way they do it, it's however you transfer information outward, right, has to be in a secure environment, right? Once the borrower gets it, if it is a borrower that's getting the information, I'm not sure it goes beyond that. I mean, they're just wanting to make sure that you're transferring data in a secure method. I'm not sure. I'm not sure if that fully answers it. And I can't say I'm an expert on this yet, but the way I've been reading the documents, it's gone to that level. Not what does the borrower, once you've transmitted data, how do they do it? And I would say if they're transferring stuff with you over the text, I would encourage everything you do from them to send them in a way that's more secure versus less secure, based on the questions that I've seen.
Great, thank you. So we may have a question from Alicia Maston. Sometimes hands go up on their own. So Alicia, if you're there, do you have a question? All right, I think maybe that's just a rogue hand up. So I think that's all we have for questions at the moment.
Well, thanks a lot. This is very helpful. And can we lean on you to come back to us as these things progress?
I think so. I think as we make progress, I'll definitely make you aware of it all, and be happy to share what we learn.
Great. This is really helpful stuff, and we'll keep talking about this. Thanks, as always. And Bhalat is also one of the board members for NHRC, so appreciate all the roles he plays here. So we had a very interesting conversation with Wayne Ting from the White House. He's from the National Economic Council, and he's a senior policy advisor at the White House. And a couple weeks ago, in our last call, we had Lisa Donner on the call, and we were discussing the $18 billion, that's with a B, of HAMP money that will likely go unspent at the current rate. And there's, as you know, a real interest in the administration to figure out things they could do that were non-legislative, that don't rely on Congress, to help boost the economy and help the housing situation, things like that. And a whole group of us have been working on generating that list of HAMP proposals. One of the vehicles that the administration has looked at is the MHA Outreach and Intake Program. And the word came back pretty quickly that that program has been a real disappointment and has not generated a lot of new business. And so we had and you know, on our side, people had a long list of frustrations around this. And so a few weeks ago, many of you, we had quite a crowd on the call, participated in a conversation about what were the problems. And we put this together into a laundry list. And then yesterday, a smaller group of us met with Wayne Ting to talk about this and what might be possible. So let's see. So Linda Ingram is going to join us. And do you know if Diane, she's not able to come. Okay, so Linda, it's you and me.
Okay. Can you hear me?
Beautifully, yes.
Good.
Okay, so Linda, do you want to just give your quick analysis of what the problems you've seen with the MHA program are?
Sure. We joined the MHA Outreach and Intake Program, and we also do the NFMC program. And when we initially started with the MHA program, we used our outreach funding, which was a critical part of the program, and it worked well. And we used all of our outreach money, and we had homeowners calling us. We started having problems with the actual submission through Hope Loanport, and whether or not it was eligible for the program. And so the bottom line became, would it be easier and would we still accomplish our goals in helping homeowners to just submit through Hope Loan Portal as we always did, and then work towards getting them a HAMP modification, and go that way, because it was taking too much time entering into Hope Loan Port, and then if the file was rejected, we would have to start all over again outside of the MHA outreach program through NFMC. So there are issues there. And when you look at the payment of $450 and you're weighing how much business time does it take us to work with the homeowner, it just made more sense to use the more efficient method. So let's see, what else, Bruce? Help me out here.
Well, so there were a whole range of issues here. So maybe the biggest problem is that it parallels NFMC rather than paying us for work that NFMC wouldn't pay for. So that was a big frustration. We knew that from day one, and that was sort of the legal interpretation. So maybe there can be a way of revisiting that question. But you weren't allowed to match any money with the MHA money, so not even private money. So NFMC, you can't use HUD money, but you could use to pay for the rest of the case. But you could use private money, you could use CDBG money, there were other alternatives. That wasn't the case with the MHA money. So it turns out some of the call centers might get a small referral fee for taking the call. That completely knocked that case out of from even being eligible for MHA. It kind of priced itself out for local agencies that really paid each case together. So that was a set of problems. So there was the problem you mentioned in Hope Loan Port. Somehow when you referred into the channel that was for MHA, you then just got evaluated for that, had to start all over again to go into the other channel to do to get the other alternatives, rather than having that flow automatically. And so it meant that there were delays in the cases. Councils reported that the pickup time on the MHA cases was significantly longer on in Hope Loan Port than it was in the NFMC in the regular channel. So a whole set of ranges of issues around that. Lots of complaints with intermediaries handling it, that the administrative money was pretty low, that it was a percentage of the NFMC contract, so that's going to be smaller, and then the admin money was reduced. There were a lot of startup costs for groups, a lot of training, a lot of figuring out how the system works kind of costs that didn't get reimbursed as a result. And then the oversight money was paid on a per-case basis, and since the volumes were low, there was very little money for oversight, even though you still had to do the oversight even if the volumes were low. So that's kind of the list. Oh yeah, there were a whole set of issues about this whole issue of eligibility. So you mentioned that you did you were successful in the initial outreach, but then people coming in weren't eligible for MHA because maybe they got the loan after 2009, maybe it was an FHA loan, which was barred by statute from being in the program. Maybe it was that somebody had already done HAMP. I mean, there were a range of things here that knocked eligible clients out, and as a result, there were kind of a limited pool and hard to predict who's going to be eligible, and you can't really target your marketing to the people that are.
When we did have difficulties with a submission that we disagreed with the denial from MHA Outreach Program, we thought it should be accepted. We disagreed. Trying to make our way through that disagreement was not worth the time. We tried it, and we worked for at least 2 months trying on one case because we thought that it should be an accepted case. And so we finally just had to pull it and, work it through NFMC. And then the other thing, Bruce, that I think I said at the beginning is we're all struggling. I think it's safe to say we're all struggling to get people, homeowners, to call us, to contact us. There are all sorts of reasons for that. I mean, the good news is the foreclosure rate is down, but the bad news is those who are still experiencing it and are being contacted aggressively by the servicers to work with them still need housing counseling. This is a process that's very difficult for homeowners to go through on their own. So we've already used the initial outreach funding, and so I would say we definitely need to be supported in funding with marketing on a continual basis. Marketing, you have to hit people. I mean, there are all sorts of statistics how many times, and that hasn't been happening. Maybe a little bit on a national level, but not effective locally at all, unless we do our own, which we want to do.
But it's expensive and heavy challenge on resources.
Right.
So let's be sure to talk about outreach and the proposals we've got on outreach, but that would be separate from this conversation, but would involve the unspent $18 billion. But on the on this Making MHA Outreach and Intake program work, what was your thoughts on the response by Wayne Ting from the White House?
I think he was definitely listening to what we were saying, and I think that he might be willing to look at possibly increasing the payment that we would get, which would certainly be an incentive to work harder on the MHA program. So I thought that was good. I thought he was willing to look at Hope Loanport and see what technical problems there are that could be fixed. So I think he had a positive reaction to what we were saying.
So this is very interesting. So we're now in the world of practical policy, and what can you do and not do given the legislative and political constraints. And so he quickly kind of put everything in buckets and said on the, just as Linda said, so areas that they could look at would be technical fixes to make it easier to use the MHA program, and they could look at, they would be open to looking at the increasing the amount that gets paid for the counseling activity that gets done, but they wanted to know that it was that there were comparable market situations where that funding level was higher than the 450, and so they wanted examples from us. But they also said that it's a much higher lift to address issues like increasing the eligible pool of borrowers who could apply through the MHA program, and making those kind of bigger policy changes. It's not that it's a completely closed door, but those sorts of things will be, they were stopped earlier because of legal barriers, and while they might revisit them and they've been able to pull the door open more on some programs than they had in the past, it's a much bigger challenge. And so, increasing the, having the funding cover more activities after the submission, things like that, those become more difficult. So it kind of leaves us with this, and his question was very specific. So if they did those two changes, so if they figured out how to raise the funding for the housing counseling, and if they did the if they were able to if they did some changes with the glitches in the system, would they with like Hope Loan Port and being able to submit cases, would we be able to have much higher production? And I think specifically they're not trying to cannibalize the NFMC business, but that that they get cases that they wouldn't have reached before, and we can get more volume in. So that's kind of the question here. So this is the question we're putting to you as people out of the field who are doing this. If we could pull this off, if we could, with basically some modest changes to the program, significantly increase volumes. So I think we'll open the question box for that. And while we're talking here, we have some very specific needs. The biggest one of which is that if you can tell us, give us examples of programs that are paying more than $450 per case on delinquency counseling, that we can put out as the market standard. And what would be ideal is if you had the pricing schedule and then you had the documentation from the funding source. So the White House is asking for that specifically because they're not. What Treasury is saying is the $450 is what comparable pricing is for this kind of activity, both in the private and nonprofit markets. And so we need. They don't want to be out there, arguing for something that shows that they're paying a great deal more for a service that would be available more cheaply. And I don't want to get back and forth about the level and the quality of the service. I'm just trying to encourage us to identify those places where the funding is much more robust, and we can use as examples and models for the funding going forward. So that's huge.
Do we want funding, or do we want the actual agency cost of doing the counseling? Because $450 doesn't cover the cost of doing the counseling. We have other sources so that we can pay salaries and pay overhead and pay that. So, he's asking very specifically for what other entities are paying. Okay.
But I think we don't really have what you just described, and it would be helpful, and we would use it in this context and others, if groups really have a way of costing out what it costs to do a delinquency counseling case, or maybe a way of pricing different categories of cases, so the ones that go through your system very quickly and the ones that take 6 months, and whatever framework you've got, as long as it's really hard numbers. I mean, we have these kind of estimates that we've gotten that are just very hard to use because they don't really, it's hard to tell what they're based on. So if you've gone through and said, this is these are our costs, and we're identifying these activities and this expense, that would be very helpful right now.
I'm going to jump in with some comments and a question. So by way of comments in response to some of the things the questions you raised, we have a big part of the problem with creating MHA cases is that the large servicers have sold off their loans to smaller servicers who don't participate in Hope Loan Port and or MHA. Another comment, a higher incentive fee would most likely not increase our volume. We simply don't have many MHA-eligible cases that can be submitted through the portal. I don't know if either of you want to comment on either of those comments, or we do have a question as well.
I think duly noted both issues. We certainly have raised this issue about services not being on Hope Loan Port as one of the threshold problems. So what's the question?
Why was eligibility of this program limited to NFMC participants?
Oh, very specific reason. The problem here is to get to have a network of a way to distribute the money. It's very difficult for Treasury to well, actually, not difficult. You have to contract with Treasury in order to do this program. There are very few entities that actually ever qualified. So Fannie Mae is one of them, Bank of New York is one of them, and NeighborWorks is one of them. It was an incredibly small pool, and they could have gone and found some other national network, but it would have taken 9 months of vetting and not a guarantee that the group would have gotten through it. And instead, and in fact, 9 months might have been optimistic. It's the government contracting process. It's difficult and cumbersome, and there were very few institutions that could do it. NeighborWorks was in place, plus they had a distribution network. Now, and what happened then was intermediaries were given the option to opt in or opt out, or actually to opt into this program, and some groups looked at it and said, that the complications of doing this program are more than we want to take on. NFMC will stick with NFMC, especially with some of the numbers arranged with them. So not every intermediary even got into the program, but certainly the ones that did, then they could spread their network and spread it through there. But that's the short answer. We spent a lot of time on this question, I have to say, without moving the dial any. So, having a good distribution network for funding proposals is a real challenge in a lot of our work.
That's all we've got for questions or comments.
Okay, so I think we have to get our arms around this. This is an opportunity, but I think the comment from one agency was that it's not going to increase their business, and that may be where we land. Here's the hard part: is we have to figure out. We're making proposals to the administration right now about how to get that $14 billion out. Everybody would like to see more money in the system. We all know we have needs. There are not very many vehicles to do this in, and so that's why it's getting some attention. We can't do another NFMC because NFMC is a congressional allocation, but you can try to figure out some kind of parallel structure to that. So there are all these challenges to this, and it's the problem of once you get into real nitty-gritty of policy. We mentioned earlier outreach, and some of you who are long-termers know that we've been pushing for over 4 years now for HAMP to do a real national multi-layered saturation marketing program that drives people to local counseling groups and to legal services. And we thought we had a breakthrough in January where they indicated some openness. Treasury's clearly not convinced that they want to do this, and so we're working on the White House to try to bring this in. And the idea is that there would be a multi-layered approach. So there could be door knocking, there would be radio, there would be mailers, there would be community meetings, similar to what we had done with the IFR. And we, IFR round 2, where there was a common messaging and a pretty good joint effort that produced some pretty good results. The message we're getting back from Treasury right now, and that the White House told us what Treasury is saying, so it's being cast wide, is that most of those mechanisms don't work anymore, that internet searches are the way to go, and capturing more of people who are looking for Counseling on the Internet are the one return thing. Their events have declined a lot. We're arguing we're doing something a little bit different, and it hasn't been done enough and well enough, but it would be very helpful right now if you've got good examples of metrics that are real documented numbers of grassroots efforts that you did that produced return in terms of people participating, and then also in people then going through the counseling program and applying for modification. So any kind of data like that about what works would be really helpful right now. We're in a bit of an uphill fight. But our thinking is that if we could couple outreach with the available funds in NFMC and then maybe a reinvigorated MHA program, that creates an opportunity for us. Love your feedback on that as well. We definitely need that costing of what that pricing of what who's providing funding for housing counseling delinquency work that's above the 450, and I'll send an email out about that as a note to reach people as well. Okay, well that was kind of a marathon session. Very good. Appreciate the feedback we got. So it's we'll have a busy week, a couple weeks coming up around the legislation and around the appropriations that we've got in the on the Hill, and these conversations about trying to figure out how to get the funding to work on the potential of the unspent HAP money. So I'll appreciate all the work you all are doing out there, and we'll stay in touch on lots of initiatives. Talk to you soon. Oh, wait a minute. What am I saying? We've got, let me do a quick welcome to the new members of NHRC. So we've got a whole variety of groups that have been joining recently. I want to encourage you to do that as well before we exit. And we also want to encourage you to join. And we've really seen an uptick in memberships, and we appreciate this a lot. There's a fee schedule on our website. I'll send out a note about joining NHRC so that everybody can get the schedule for membership. We still have the discounted credit reports. We have some other programs as well to help with your work. But the real thing is it keeps us in the business and advocacy world. And membership dues have become a very important part of our funding base. So with that note, have a good week, everybody out there. We really appreciate your work and appreciate all the involvement you had over the last 2 weeks on the GSE reform. Thanks a lot.